So today I'm going to talk a little bit about reserving in the marketplace. And 20 years ago or 25 years ago, reserving was done on a spreadsheet. There's triangulations, there's projections of the triangulations. Sometimes it happens on a specific piece of software. Then you import it into Excel and you make your selections. And historically, it was done by one person or two people tops. And still, you would get a statement of actuarial opinion on it, and that would roughly be the reserving process. It is a process. Communication with stakeholders, etc., etc. That's what it was. And today, it's evolved into quite a bigger process. Every element of assumptions that used to go into the reserving process back then, things like business plan loss ratio, initial expected loss ratio, all of that has sparked off into another big process. So business planning is another big process that actuaries are involved with. Historically, it was done less so by actuaries, more so by underwriters, chief underwriting officers. Now it's more on the actuarial space to as-if loss ratios. So that's another big process. And initial expected loss ratios, estimating that is also another big process by actuaries. And projections, that has become another big process as well. Sometimes it's offshored to a location. Everything that was very succinct and small, today it's much, much bigger and much, much more complicated. Is it valuable? Yes, of course it's valuable, but it's building on the same triangulation idea. Triangles and projecting triangles into the future to estimate the future ultimate loss. What it hasn't gone through is this transformation of understanding. Yes, there's an exposure period, claim occurs, claim is notified, and that initial reserves are set, and these reserves are adjusted as more information comes in, and then ultimately it's settled. This time lag estimation, which can happen through machine learning, through lots of collecting data, that evolution hasn't happened because we are still, what I would say is, we're stuck in the triangle. However, we've not spent time understanding those other things. There are companies, there are places where they do investigate those new techniques. There are machine learning techniques that could be adopted in this sphere of thinking. London market, specialty insurance and reinsurance, we've not evolved from the triangle. We're still stuck in the triangle. Plenty of scope for transformation in the reserving process, in the whole reserving space, in terms of exposure, when the claim occurs, when a reserves are set, how and why the reserves change, and ultimate settlement. And collecting all that data claim by claim and analyzing what the time lags are, what the initial estimations are. I don't see the London market doing all the new stuff where they have built these over-engineered massive processes that are still built around triangulations.